Hey everyone, thanks to Quincy and the whole research team for all their work pulling together today's material. Welcome back to Canada News Summaries. I'm Mike, and with me today is Jane. We're going to be looking at Canadian REITs, specifically their prospects as we head into 2025. Don't forget to hit that follow button and share this with your friends. Helps everyone stay informed. So Jane, the research team dug up some really interesting stuff on REIT performance last year. Anything in particular catch your eye?
Oh, yeah. 2024 was a wild ride for REITs. The real estate index actually ended up lagging behind the TSX composite by quite a bit, over 16%.
Yeah, it's a pretty significant gap. Given that kind of performance, why should anyone be optimistic about REITs in 2025?
Well, that's the thing. The experts are predicting a pretty big turnaround. We could see a total return of over 10% for Canadian REITs this year.
Wow. Talk about a potential jump. Going from lagging to double-digit gains, what's driving that kind of optimism?
There are three main components at play. First, you've got the anticipated sector growth. Then there are the yields REITs offer, which are usually pretty attractive to investors. And finally, the potential for what's called multiple expansion. Basically, it comes down to the discount REITs are trading at compared to their net asset value. The smaller that discount, the better the return.
Okay, so does that mean the Bank of Canada cutting interest rates is a good sign for REITs?
Lower interest rates definitely help. But the real key, the catalyst everyone is watching, is what happens with long bond yields.
Let's break that down a bit. Remind us what long bond yields are and why they matter so much here.
Think of long bond yields as kind of reflecting what the market thinks inflation will do in the future. Right now, there's a lot of uncertainty around things like trade and tariffs, particularly some of the new policies being talked about. It's making investors nervous.
You're talking about those policies south of the border, all that talk about tax cuts and increased spending.
Exactly. Those types of policies can have a ripple effect on inflation, not just in the US, but in Canada too. And then you add in the possibility of tariffs on Canadian imports, and things get even more complicated.
So if trade tensions ease up and some of that uncertainty goes away, those long bond yields could come down. And that would give REITs a chance to rally.
Precisely. If we can get some clarity around those tariffs, especially if that threat of broader tariffs on Canada goes away, investors are likely to feel a lot more confident. And that could lead to that discount on net asset value shrinking, which would be a great thing for REITs.
That makes sense. So even with all this uncertainty, are there any specific REITs that look promising for 2025? I know the research highlighted a few.
Yes, they did. Let's start with Primaris REITs. They focus on shopping centers. I know what you're thinking. Aren't shopping centers struggling these days?
Yeah, that was my first thought too, especially with online shopping becoming so popular.
Yeah.
What makes Primaris stand out?
Well, it's important to remember that while new mall construction has slowed down, existing malls have kind of found a balance. Foot traffic and demand have stabilized.
So they're not expanding rapidly, but they're not disappearing either.
Exactly. And Primaris is in a unique position. It's the only REIT in Canada that focuses only on malls. And they've got a very strong and experienced management team. Plus, they're currently trading at a significant discount to their net asset value.
So there's room for their price to go up if the market recognizes their value.
That's the thinking. They're also projecting some solid growth for this year, around 7%, fueled by their internal cash flow and leasing strategies. They're actively creating value, not just waiting for things to happen.
It sounds like they're taking a very proactive approach. Are there any other factors working in Primaris's favor?
Definitely. They have a very attractive payout ratio. They maintain low leverage. And their occupancy rate is very high, around 93.5%. Those are all great signs of financial stability. And they point towards potential for continued growth. They are. And their focus on improving the overall shopping experience really shows they're thinking ahead. For example, Primaris has been putting money into experiential retail spaces in their malls. They know that people are looking for more than just shopping when they go to these centers.
That's interesting. It seems like they're adapting to the way people's preferences are changing.
Yeah.
So moving on, are there any other REITs that stood out to you?
Absolutely. Prologis is definitely one to watch. They're the biggest industrial REIT globally, with a huge presence in 19 countries, including Canada. Their holdings are massive, about 1 billion square feet.
Wow, that's impressive. What are some of the benefits Prologis gets from having such a large portfolio?
Well, for one, they have a lot of power when negotiating with their tenants. We're seeing that in their rent increases when leases are renewed. They've been pretty substantial, around 60% just this year.
So they're already making good returns. But what about their future? What makes them stand out in terms of growth?
This is where things get really interesting. Prologis has been strategically redeveloping some of their warehouses into data centers, and it's turning out to be very profitable. They recently converted one warehouse into a huge 32-megawatt data center and sold it for a whopping $735 million.
That's amazing.
Yeah.
They're essentially tapping into the growing demand for data storage and digital infrastructure.
Exactly. And the great thing about this strategy is that they have the potential to do it over and over again. They've estimated that they could do over 100 of these conversions in the next 5 years. It's a potential gold mine.
Sounds like they're taking advantage of a major trend. Okay, so we have Primaris adapting to the changing retail world and Prologis innovating with data centers. Are there any other REITs we should have on our radar?
Let's talk about Chartwell. They're a major player in the senior housing sector. As you know, the demand for senior housing in Canada is going to increase a lot in the next few years, mainly because of demographics.
Right, the aging population is a big factor.
Yeah.
How is Chartwell set up to take advantage of this trend?
Well, there's a huge gap between the projected demand for senior housing and the current supply. We need something like 200,000 units between 2025 and 2042. But in the last 10 years, we've only built less than 72,000. That's a big difference.
It seems like that would lead to continuous occupancy growth and the potential for rent increases, which would be good for Chartwell.
Absolutely. They're in a great position to benefit from this demographic shift. And I've actually heard about the good work they're doing firsthand. My daughter works for Chartwell. She's told me about their commitment to providing quality care and creating supportive communities for seniors.
That's great to hear. It's encouraging to see companies that are not just focused on profits, but also on making a positive difference.
Yeah.
So to sum up, we have Primaris navigating the evolving retail landscape, Prologis embracing data center conversions, and Chartwell riding the wave of senior housing demand. It seems like there's some really good opportunities in the Canadian REIT market, even with those concerns about 2024.
Exactly. And it's important to remember that long bond yields, while important, are only one piece of the puzzle. Sector-specific trends and individual company strategies also play a big role in determining success. It's going to be interesting to see how everything plays out in 2025.
I agree. I want to switch gears for a minute and talk about what this all means for our listeners. You've shared a lot of great insights, but how can they use this knowledge to make financial decisions?
That's a great question. Understanding these trends and the factors that affect REIT performance can be really helpful when you're making investment decisions. It's not just about choosing individual REITs, it's about understanding the bigger economic picture.
So it's about understanding the relationship between things like interest rates, inflation, and those sector-specific dynamics you mentioned.
Exactly. Having that context can help you figure out both the potential risks and rewards that come with REITs.
Let's say someone is interested in looking into REITs as an investment. What are some key things they should watch for in 2025?
It's really important to keep an eye on those long bond yields. How they move shows investor sentiment and inflation expectations, which have a direct impact on how REITs are valued.
So watching those yields can give us an idea of how the market is feeling overall.
Right. I'd also recommend staying up to date on anything related to trade tensions and tariffs, especially any news that might mean those policies are changing. Remember that uncertainty is a big reason why those long bond yields are so high. Any good news on that front could be a positive sign for REITs.
Less uncertainty usually means more confidence in the market.
Exactly. And of course, it's always important to do your own research on any specific REIT you're interested in. Look at their financials, their management team's experience and track record, and their overall strategies. Making an informed decision is always the best way to go.
Sounds like doing your homework is key. Well, we covered a lot of ground today. Explored the potential for REITs to bounce back in 2025, talked about how important long bond yields are, and even dug into some promising REITs to watch. Before we go, I want to leave our listeners with something to think about.
I always like a good, thought-provoking question.
Out of everything we've discussed today, what stood out to you? What specific factors or REITs are you most interested in and why?
That's a good question. What are you most curious about? What fits with your own investment goals? How much risk you're comfortable with?
We'd love to hear your thoughts. Share them with us on our social media. We always appreciate hearing from our listeners. And don't forget to follow, like, and share this episode with anyone who might want to learn more about Canadian REITs. Thanks for joining us today.
Thanks for listening. Until next time, happy investing.